All right, guys. So we're going to go over supply and demand. This is just a sneak peek. So you're going to see this class again when the mentorship starts, but it's going to be a lot more put together. So this is just kind of like a rough draft, as we could say, before the final copy. So supply and demand. So let's basically understand what supply and demand is, right? Supply and demand is basically what drives price, right? However you want to put it, it just drives price. So put that in your notes. Supply and demand drives price. It's what moves price, okay? So if demand is greater than supply, people are buying or refuse to sell, right? Do that make sense? So when that happens, price rises, okay? So let's make sure that everybody understand that simple part. If demand is greater than supply, people are buying or refuse to sell. Peep what I just said, or refuse to sell. So the reason why I put that in here is because everybody thinks that no matter what, right? People are always buying and selling, right? I literally, like, I be getting on my little brother about this. He'd be like, man, the market makers, they are buying. I'm like, bro, there's are times where they're not buying nothing. They're just not selling, right? And that just causes price to kind of, that's where you get that choppiness. Price likes to be stagnant or whatever, right? You want to buy when people are buying. You don't want to buy when they're just refusing to sell, right? Because that's when you get that choppy action, okay? But price rises when people refuse to sell, okay? Next, if supply is greater than demand, people are selling or refuse to buy, right? And then if that happens, price falls. Did that make sense so far? All right, that's pretty simple, okay? Now, this is going to be key, right? This is going to be key. I put this in the mindset. It's kind of like your mindset. Just always think of this when you're drawing supply and demand, okay? To buy one share, somebody has to sell one share or vice versa, right? Understand that. Remember, guys, think of this. When somebody wants to buy something, somebody has to sell it. And the same way, when somebody wants to sell something, somebody has to buy it. So to put this in simple terms, if somebody wants to buy one call option, somebody has to sell one call option, right? Vice versa. So whenever you're drawing supply and demand, remember that, okay? So, and this is going to make sense in a minute. How can you tell when supply is greater than demand? We're about to show you, okay? So let's go ahead and get into some actual demonstrations of this, okay? So let me stop this. Pull up my chart. All right, can everybody see my blank screen right here? Okay, so I'm gonna give y'all a nice little drawing demonstration of what do I mean by this, right? So let's say that we are starting, let me get my tool real quick. That's my tool. Okay. All right. So let's say that price is pretty much right here. So let me draw this. Everybody see this X right here? Okay. So let's say price is moving sideways. All right. I'm gonna make this a little bigger. Okay. So let's say that price is moving sideways. And a hedge fund, right? To understand, guys, price only moves for big money, right? So let's say that a hedge fund wants to buy a market maker or whatever, a big money, somebody with a lot of money, like we're talking about billions of dollars. Let's say that they want to buy 100,000 shares, right? We're going to call it, I don't know, somebody we just gonna say it. Big money wants to buy 100,000. I'm just put 100K shares. And right, understand, guys, we're looking at the psychology behind supply and demand. Okay. So remember, guys, remember what the notes just said. I'm gonna need y'all to be kind of active when I'm asking y'all these questions. So this is where price is at right now. Price is pretty much staying sideways when price is staying sideways, what are some names that we call price when it's trading sideways? What is the actual name that we're looking for? Chop consolidation. That's the word that I'm looking for, right? So good job if you got consolidation. So this is where price is moving sideways. Big money decides that they want to buy 100,000 shares or something, okay? So remember what I just said. In order to buy 100,000 shares, what has to happen? Sales, right? Somebody has to sell 100,000 shares, okay? So in order to sell 100,000 shares, we have to basically put this psychology behind it. We have to create what kind of patterns are we looking to create? Because if price is moving sideways, okay, first of all, let's do it this way so it can make sense, right? Stay with me, guys. I'll make sure I'm explaining this perfectly for you. Okay, so if we want to sell after consolidation, if we want to buy 100,000 shares and we need someone to sell, what do we have to do with price? We have to create what? Remember, we want price to do what from this point? Because we're trying to get people to sell. So first to push to, I'm already saying it on accident. But basically, if price is trading sideways, we have to do what? What is the next step? We have to, okay, so stay with me, guys. So we have to push up, right? We have to push up because remember, we have to convince sellers that we're going to sell. So we have to give them a sell, some type of sell pattern. What will be those sell patterns potentially be? Not a fake out yet. What would those sell patterns have to be? What are some examples of a sell pattern? What is like the main pattern? You got a head and shoulders. Give me a simple one though. Give me a simple one. Everybody know the sell. A double top. There we go. Okay. This is the most common one, right? A double top. So to convince sellers that we want, like we have to get 100K shares, we have to give sellers something that they want, right? Which is a bearish pattern, okay? So we come here, we push up after that consolidation. We come here. Damn, hold on, y'all. Okay, so we're going to stop it right here. Hold on, let me just draw the double top out. Okay, right? So y'all with me still? Everybody with me? Let's make sure. Okay, so understand this is what we're doing. We were consolidating at first. Big money decides they want to buy 100,000 shares. So that means we need to sell 100,000 shares to be able to buy 100,000 shares. They haven't bought shares here yet, right? Because they want that we need sale orders to even buy them. You just can't come in the market and say, hey, I want 100,000 shares, so I'm gonna just buy them. No, you need sellers to sell 100,000 shares for you to be able to get that, right? So that's where this point at. We haven't even bought them yet. So we create the double top, right? So what do sellers do? They see this, and this will also, what would this be? And I'm gonna get into drawing them in a minute, but what would this be, right? Once we reject, right? What is this telling you? This is a what? Supply zone, right? Where would a stop loss, if you were to buy puts, where would your stop loss be if you were to buy puts? Right above the zone, right? So we are going ahead and draw a stop loss right here. So that'll be our stop loss. Okay. And I'm gonna just put this right here so nobody get confused. Sellers, stay with me, y'all. It's gonna make sense in a minute. Okay, I still got this thing going real quick. Damn. Delete that. Okay. All right, so this is the seller stop loss, right? A seller not going to be able to get in right here, right? Obviously, the pattern is not made yet. They're going to see the double top and they're going to get in, right? They're going to start taking their positions right here, right? Because they saying double top, this is where sellers enter it. And there we go, right? They enter here, stop loss above. Now, also, let's think about it this way. Now, let's say that sellers take puts right here, right? And then we have a move like this. What are buyers thinking right here? What is this? What would this be? Right here. What would this be? A double bottom, right? And then where would the buyer stop loss be? Right below, right? So let me draw that. Hold on, let me change this color. So this is seller stop loss and buyer stop loss. Okay, make that green. All right. So now that we have our, this is pretty, and we're gonna draw this in a minute. But now that we have, and we're looking at psychology, now that we have our demand zone and we have our supply zone, right? Remember, what do big money wants to do? They want to buy, remember, stay the same. Remember from the consolidation, right? Big money wants to buy 100,000 shares. So this is literally them setting up their plan to get that, okay? So at this stage right here, this is what, and I'm gonna draw this, right? A lot of people don't know this, right? But as we're selling, right, and we're creating, so what they would do is they're not gonna just buy all their shares right here, right? They're not gonna do all that. Once we start selling, they're gonna start buying some. So if they want 100K shares within this zone, right? We call this accumulation, okay? Y'all still with me? So they want to buy, hold on, so we're going to call this whole zone accumulation, right? So they want to buy 100K shares. So they probably, when I'm saying accumulation, what are they probably doing right now? They're buying like 20K shares, boom, 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 this and that, okay? So now, here go the move of everybody we wanted to, right? So if we want to stop out buyers, right? Because we don't want to make the market easy, okay? We have to free up liquidity. So if right now people are buying and we want to free up liquidity, what are we going to do? If we want to free up liquidity, right? What are we going to do? I'll answer questions in a minute. If we want to do a liquidity, if we want to stop people out, what are we going to do? We're going to let price go to the stops, right? Okay, first of all, let's go back, like think about the psychology. How many times have you entered a trade and you got stopped out just to see the trade go your way? All the time, right? So when we're talking about the psychology behind it, that's what I'm talking about, right? I'm talking about, think of the psychology on how the market moves, right? So this is what happens, right? So buyers have demand, their stop loss is right below, and then sellers have their sales and stop loss right above. So what the market likes to do is, in this phase, they want to buy 100K shares. They're going to come down. They're going to stop them out. They're going to stop the buyers out. Also, who else buys here? When they see it break this low, who also buys here, right? We have to free up liquidity. We have to pretty much fuck up retail, okay? So who else is buying here? Breakout traders are also entering here. So you stop out the buyers, okay? We stop them out right there. And then the breakout traders, what are we doing? We stopping them out by bringing it back above demand. And you see it move like this. Okay, who else gets stops out? Then we trigger these stops as well. Anybody that was able to, like, you know, they tried the bag hold or whatever. How many of you guys have bag held and then the market just rips and stop you out after you was up like 100%? Like how many people have probably took sales right here and they were trying to get it to go lower, it got to move lower, and then it immediately reversed and stopped them out, right? So this happens so many times. You have to understand the psychology on how the market likes to move, right? So we're going to be paying attention to this move right here. This is the fake out that we're talking about. They wanted to buy 100,000. They want to buy 100,000 shares. They accumulate shares between this little chop, what we call chop, right? When they're accumulating, that's when we get that choppy market, okay? And then what happens is we stop them out and then we make the real move. So this is exactly why I tell people that just because we break it, and this is exactly what happened today, right? This is what happened today, okay? Once we break something, don't mean you immediately take sales, right? You don't want to immediately do that because then you get these rips, right? So the move that we seen today on NASDAQ is exactly what I'm drawing right now. The big money decided they wanted to buy. They did the fake out shit, made you think sales, it broke below, and then it just ripped back to the upside, okay? And stopping everybody out, right? And this is where most retail traders get stopped out at. They get chopped up during the accumulation phase. Then they get stopped out, right? So this is just understanding psychology. Did this make sense so far? And I'm gonna get on the live charts in a minute and show you another example. But I'm just trying to get you guys to understand that whenever you see consolidation and then we have something like this, guys, the best way to do this is, okay, so the best way to do this is, like I like to do it, don't immediately short this. If we decide to drop, you want to wait, and then when we break back above, that's when you could take your entry, right? It could be that simple because it's going to go, okay? So don't short it. Just because we break demand, don't mean go ahead and short it. And I know sometimes that happens, but I'm gonna show you XPX did this exact thing, right? Actually, real quick, let's go to XPX and let's just show you. If you don't believe it, let's just show you. I'm about to just show you. I mean, it's right here. So, and I'm gonna get into how you draw demand, but this is XPX daily time frame, right? So we had our demand right here. We came back, we ran up off this demand. We came back to retest that demand. Sellers did what? They shorted. And what did it do? It broke back above and it destroyed them completely, right? Do y'all see what I just drew? Do y'all see that now? This was your little accumulation, right? And then what happened? We broke below and then we came right back above. Do everybody see this? Yep, we destroyed shorts on here. Now, no, I ain't gonna sit here and lie. If you caught this move down, you caught it. I mean, it is what it is. But you just want to make sure that you're looking out for that, because I know people get too stuck. Like, oh man, we broke demand, man. We about to sell, and then it just rips you apart. Everybody see this. So that's why this is a live, and I'm gonna get to more live examples in a minute. But everybody see that, right? This is your demand zone. I'm gonna show you how I drew it and everything. This is your demand zone, right? We broke below. This was that fake out move that we were talking about. Buyers have what? Okay, go here, right? Buyers, they buying, they have their stop loss, right? They literally broke below the stop loss, stopped them out. Breakout traders took this down. And then what do? We just broke right back above, stopped all of them out, okay? So this happens so many times, it doesn't make, like, it literally, you're gonna see how many times this happened, okay? So do that make sense so far? Anybody confused on this? And I'm gonna show, like I said, I'm gonna show you how to draw supply and demand zones, but I'm just saying, do this make sense? All right, cool. All right, so let's go back to my NAS, because that's where I drew the other stuff on. All right, so that's number one. So next, we have another type of supply and demand, okay? So this is another form of supply and demand. This is the most typical one. This is pretty much, remember, I just taught you guys the psychology behind supply and demand, right? So you're going to use that same exact mindset here, okay? So right here, I want y'all to walk through it. Right here, this is the rally-based rally. So right here, buyers, they want to, they buy, right? They want to buy more shares. They want to go up higher. So they want to do what here? What are they doing here? When it does this, what are they doing? this is what, let's just keep it simple. They're accumulating right here, right? And this is pretty much what do we call this right here? This whole area. What is this called? What do we call this? No, not the demand. Just chop. There you go. This is just sideways action. Price is not going up. Price is not going down, right? This is a sideways action. So that should make sense to you. When we're doing sideways, big money is doing what? They're most likely doing what when we're going sideways? They're accumulating, okay? So our job isn't to, oh man, big money is accumulating, let me accumulate. No, because we don't know how long or how many shares. The more shares they want, the more they're going to accumulate, okay? So this is how this works. Let's look at the psychology behind this, okay? So we have a move up, right? And we have our pullback into demand. It's our demand zone, okay? And then we push off that demand zone and we pretty much hold that demand zone. This is where this is how they do the stop losses, right? So once we hit this top, sellers are doing what? They thinking this right here. Like, it's not a double top, but what is this? What is this? This move right here, what is this? Sellers think we're starting a downtrend, right? And they're recreating lower highs. So what they want to do is, remember, it's lower highs. Let's not even go for patterns. Let's just think of market structure right now, because this is the only way you're supposed to trade is market structure. This is literally just a lower high. So whenever you see a lower high, what are sellers thinking when they see that lower high? They're going to do what right here? I wrote it in the notes. What are they doing right here? They're going to sell, right? So I put it in my notes right here. Buyers start selling position from rally. They start selling, right? Because they want to buy more shares on the dip, right? So buyers start selling their position from this rally. They're selling their position, right? And then accumulating. And then sellers think it's the top and they start buying puts, right? How many of you guys have thought that after a move up, you thought it was a top and you bought puts once you've seen a lower high, or maybe you've seen a lower high, maybe a little double top right here or something, you bought puts, and then you've seen it go your way a little bit, maybe, and then it just stops you the fuck out. Like, it literally just ran what I just said, the fake move. It created the fake move. The idea is to stop everybody out so you miss the move. Understand this, guys. Just, you have to have the mindset behind trading, right? When big money makes move, they don't want you in their move. That's what you have to understand. They don't want you in their move. So their job is to stop both sides out. No side is going to be safe. Their job is to trick you and the other side. And then so you all miss the move. And that's exactly what happened, right? So, and I know people saying, well, Jay, I could have, I took puts and I got this sell down here. Okay, that's fine. If you was able to catch money on that sell, that's totally fine. I'm not finna get on you because you made money on that. I'm just trying to get you to understand that that's technically not always the proper way to do it. Okay, but it's definitely okay if you're able to catch that. But I'm trying to get you guys just to understand supply and demand and how it works. Okay, so all right, so this is the psychology behind it. So how do you know if it's the real move or the big move? So that's the thing. You won't know until your characteristics start showing you, right? You don't really know. But if you trade the characteristics, you will be just fine. Okay. So, and I'm gonna get into that more in a minute, but like, let me get over this real quick. Okay. So sellers start to take puts and, they make a little money. They be in the chat. Yeah, I'm up 10, 15%. They be posting in the main chat. They be like, yeah, bro, I'm up. And then you hear them be quiet for a minute. They didn't shut up. What happened to your 10, 20%? They quiet now. They ain't saying nothing else because they didn't push the move back up. Actually, what happened? I'm gonna just show y'all exactly what happens. This is exactly what happens, okay? I'm gonna give y'all a real thing on what happens with the traders, right? All right, so you see this lower high, you think puts, okay? So you get into puts, you up about 10%. And then the market decides to push up and you sell your puts because you like, bro, what the hell going on? And then you end up buying calls because you think, oh man, double bottom, and then end up just stopping and then sell out and then stop you out again, right? That's normally what happens. So let me go over that again so nobody get confused. Let me not talk that fast, right? So what happens is you think during this accumulation phase, right? You think that this is puts, right? So you buy puts and you up a little bit, right? And then we get to this area and you be like, all right, you know, I'm holding, we're gonna break this area, and then we end up just reversing. And then you end up selling, and then you like, oh man, that's a double bottom. So guess what I'm doing? I'm buying calls. So then you buy calls, and then it stopped you out again, right? So then that's when, you know, you'd say, all right, man, I got stopped out right here, and I got stopped out right here. I quit, fuck trading, it's a scam. I'm leaving Discord. I'm done with trading. This shit is not for me. I can never get right. And then as soon as you quit trading, the shit rips. It rips, and then it's like, then guess what? The same shit happens over again. You see that it goes crazy, and this is literally what happens, guys. Literally, this is what's going to happen. It does that, and guess what? We go right back, accumulation, boom, and we do the same thing, blah, 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 boom, stop you out again, and then do that again, right? And this shit is over and over and over and over and over until you just out of money and you quit, right? So that's what happens, okay? So keep that in mind. So do this make sense so far? And I'm about to get into drawing supply and demand, but right now I'm really just trying to get you guys to understand the psychology behind how the market likes to move, right? And I'm gonna be transparent, not everything is a fake out, but you have to, the whole purpose to take from this is just because, hold on guys. All right. Hold on. All right, there you go. Thought somebody trying to break in the house. Y'all was gonna witness a scene, but all right. So there we go. So we have the fake out, and then we they talking about boxing. It wasn't gonna be no boxing. You need somebody breaking your house. That the boxing is kind of out the window at that point. So so all right. So not every time is going to be a fake out, right? But the whole purpose of understanding is don't short immediately. I'm trying to get you guys to understand when is the correct time to take puts, right? When is the correct time to take calls? When is the correct time to do all of these things, okay? So I'm not about to sit here and lie to you. If you're taking puts from here to here, that's totally fine. You're not wrong, but getting to a habit of taking your trades at the right time, okay? And then go from there. So, all right, so next, let's go into the bears example, because I know so many people are bears, so let me get y'all, how do I go over there again? Okay. So we have pretty much the same exact example over here, right? We have this move down, remember, rally base rally. Okay, we have this rally down, and then we have that. Okay, so we have our supply zone here, same thing. Buyers thinking it is a buy. So then what they do is they start buying, and they're like, oh man, I'm going up. And then it immediately drop down and stop them out. It's all the same exact thing. Sellers, they taking puts, and then it'll come back, stopping them out, and then make the real move, right? It's the same exact thing, right? Sellers start selling positions from rally, buyers thinking it's the bottom, they buying calls, right? And then they end up getting stopped out. Does this make sense? It's literally the same exact thing, just reverse. I'm not gonna go all the way into detail about that, just making sure that y'all understand, okay? All right, so if this made sense, let me know, but I'm about to start getting into like actually how to draw supply and demand. Y'all ready? All right, so let's get into how to actually draw supply and demand. Let me delete this. And we're gonna, like I said, we're gonna go on more. This is a little sneak peek. So let's go to XPX, just because it's a little cleaner right now. All right, so this is totally up to you and how you personally like to trade. I have noticed supply and demand has been a lot better on a daily time frame and the weekly time frame. That's just my personal opinion. You guys can figure out what time frame works best for you. You can definitely do it on every time frame that you want to, but overall for me, I like the daily supply and demand better. the daily and the weekly supply and demand better because it just gives me better trades and just like bigger moves in my opinion. But like I said, you could do this on any time frame, but like I said, I use mine on the daily now. So first, before we go drawing it on the raw price action, this is how you want to do it, right? So let's say that we have a move up and we have a pullback and we have a move up, right? Whenever we break that high, right, that structure, right? Remember, when we talk about structure, right, we have our higher highs, higher lows, and whenever we create the higher high, whatever made that higher high, whatever the beginning before the structure break, so this is the structure break. Let me make sure I'm being real simple with this, y'all. So hold on, stay with me, and we're gonna go over this a lot. Okay, so y'all see this right here, right? This is the what? This point right here is what? Right here. This is what? Don't let this confuse y'all. What is this? No, structure. This is a higher high. Okay. Okay, hold on. Let me just go ahead and draw that for you real quick. Y'all this finna help y'all so much, I promise you. Y'all finna be trading like some crazy people now. So this is a higher high. And then what is this? Higher low. Y'all finna be like, Jay, this makes so much sense in a minute. I promise you, go chart it for yourself and you're gonna see what I'm talking about. Yo, supply and demand never been this good before. And this took me a while because technically, I'm gonna be honest with you guys, there's no correct or right way to draw supply and demand. You have to kind of figure out what works for you in a sense. So, because like the way I draw supply and demand now might not be the way somebody else draws supply and demand. So it's kind of like to me, this works flawlessly. And I'm gonna show y'all on the daily. So what happened here? What happened here, guys? It broke a structure, right? Break of structure. So we broke the previous higher high. So now your demand becomes, peep this, your demand becomes the last bearish candle before the uptrend. For demand, your demand is the last bearish candle before the uptrend, right? So let's say that your bearish candle is right here. We're going to take that last bearish candle and the lowest point, and that is your demand, right? Does that make sense? The last bearish candle before the break of structure, so basically the big move, right? Okay, we'll put this way. Let me put this in the notes because I know what people are like, well, Jay, what about this? Okay, so for demand, last bearish candle plus, let me make sure I put this in there, plus lowest point. And I'm gonna show y'all what I mean by that in a minute. So demand, when you're drawing your supply and demand, you want to have the last bearish candle before the break of structure plus the lowest point. So let's do an example of that right here. Okay. So let me move this. Damn, move out the way. Okay, so we're going to just start it from we're just going to start it from right here. Okay. So what is this right here, guys? So let me draw it real quick. We want to look at this move on the right. So we have our boom. Okay. So what is this right here? Higher high, same thing. And what is this right here? Higher low. So if I'm saying the last bearish candle and the lowest point is going to look like this. So we're going to take this last bearish candle, red candle, obviously. And then instead of it being right here, because you see how, let me zoom into this for my people that be like, well, Jay. Okay. So you see how when we do just the bearish candle, we still have a low right here. Like basically this next candle is a bullish candle, but it goes below this candle. So peep what I just said. Demand, when you're drawing a demand zone, you're going to plot the last bearish candle. You want to make sure that entire bearish candle is inside of the demand and then the lowest point. So for this example, we covered the whole entire bearish candle, but also that's not the lowest point. So we're going to draw our demand a little lower, right? Did that make sense? Okay, so then we're going to bring that over here. And like I said, we had the fake out, right? Remember, think of psychology. We had the fake out and then to move up. But overall, this was still a demand zone. I'm gonna make it green. Do that make sense? And I'm about to go over another example in a minute, but do that make sense so far? And I promise you, it's gonna, like I'm telling y'all, it's gonna change everything for you. I promise you. So let's go over this one more time, just to make sure that y'all are really, really feeling it, right? I'm gonna let y'all all call it out, okay? All right. So what is this? Higher high. What is this? Higher low. Where's your demand? Near the higher low, right? And the lowest point, last bearish candle, lowest point. And then here we go. This is how it's supposed to work, right? We come down, do whatever, come down, whatever, hit that demand zone. We can either fake out or we could just hit the bottom of the demand zone, bounce, and then bounce out that demand. And what you will see a lot of times is you will see some type of little, candlestick pattern, maybe a falling wedge, maybe a bull flag, trail line break. Like, bro, it's so many things, bro. Like it's so many things it could be. Little channel break, whatever, however you want to trade, it could be all types of stuff. Okay. All right. So let's go find some more demand real quick before we move on to supply. Let's go find some more demand real quick. Oh, wait, hold on. Before we do that, I'm finna see if I can get y'all real quick. I should have just did it before. All right, so here we go. We have our uptrend. All right, so is this demand right here? So is this a valid demand? No. Why is this not a valid demand? There we go. All right, so this is how you get the best supply and demand. It is not a valid demand zone. Yeah, it can bounce. Don't get me wrong, it can bounce, but it is not a valid zone unless it breaks its structure. It has, so to be a demand zone, put this in your notes. To be a valid demand zone, it has to break structure, right? And this is why people like, Jay, how are you avoiding chop? Even if you don't want to trade supply and demand, this could be support and resistance. It could be support and resistance, however you want to do it. It could be support and resistance. This is not a trade, because this is where we start getting to that chop shit, because people think it's demand and then it does this, and then it's not doing nothing. It's not making higher highs and higher lows. It's not doing that. Okay, it's not doing that. Okay, so understand that that's not valid because it's not doing that. It's going to start moving sideways. You want to trade the what? When you're trading, you want to trade the what? I'm saying in general, what are you trying to trade? What is the easiest thing to trade? You want to trade the trend. I promise you, you trade the trend. I told my people this today, right? Let's go look at XPX. Let's just go look at XPX. Don't fight the fucking trend. Look at XPX. Look at XPX today. Let's just look at it. We are obviously in a clear uptrend, okay? Right? Just overall, price is going up. I will rather you be wrong. I will rather you be wrong I would rather you be wrong buying calls in the uptrend and just being stopped out than buying puts in the uptrend. Because if you pretty much just bought calls and, you know, when prices going up, I know this was a little harder. We get into all that later. But overall, if you had just bought calls and just held, you would have been straight. Rather than buying puts, your puts got disintegrated. I mean, literally, the puts got disintegrated today. Like they literally evaporated into the atmosphere. Like I would rather you be wrong in the uptrend, and I'm gonna pat you on the back and be like, that was a good loss. You bought calls in the trend, you just got stopped out. I would rather you get stopped out trading the trend rather than going against the trend. Okay. The problem is everybody want to get a reversal, and price just keeps sending and sending and sending, right? But let's not focus on the lower time frame. Let's go back to that. So whenever you're drawing, you want to make sure that you have that break of structure, guys. That's all that trading is. Okay. Did that make sense so far? So we're gonna go over that one. I feel like one more time is good. So I'm gonna draw some examples and then y'all let me know. So we have our uptrend. Is this a valid demand? Yep. All right. All right. Is this a valid demand? No, right? No, this is not a valid demand right here. What about here? Is this a valid demand? Okay. No. Yeah, no, this was right. I'm talking about right here. I know this last part probably threw you off, but right here we came back. This was the higher high. I mean, this is the high. We broke that high. We created that. We broke a structure right there. Right. Let me zoom in a little bit. Don't get confused, y'all. I'm talking about like, don't pay attention to this just yet. Okay. So we had this high right here. We had a break of structure. So that becomes demand. Okay. And then we had a move up, pull back, broke a structure again. So now this demand is no longer, we don't care about this demand no more. We move to the next one, right? Trade the most recent demand. Is this a valid demand? Yeah, right. So, and that's how you have your supply and demand. There's no point of you trying to predict where supply and demand is going to be. There's literally no point. Your trade is going, and this is especially for my swing traders. This is especially for you. Your trade, yes, it might not, you obviously didn't catch this move. You could have probably caught that on something else, but your trade is going to come from when we come back to this demand zone. And that's what your trade is going to be, right? You're going to make trading opportunities once we come back to that zone. Okay. All right. So let's go look at some more. So, and I'm gonna be very transparent with you guys on this, right? And I hate to say this, but I'm 100%. I don't like to blame anybody for my losses, but I'm not about to sit here and lie to y'all. TradingView made me lose today. And why is because when you look at TradingView, let me show y'all this. And this is why it's good to have other platforms. When you look at this, okay, so let's go look, let's find our demand zone, right? Hold on. TradingView definitely fucked me up today. But it's all good though. It's all good. But I'm gonna show y'all why. And y'all can go look for yourselves. Okay, so what is this? So we had this move up. What is this? Higher high. And did we break structure here? Did we break structure? So this becomes what? What did this area become? Demand. All right. So we're going to remember when we're drawing demand, what are we doing? The last what? The last what? The last bearish candle and the low. All right. So let me just walk y'all through on why I took an L today. Okay. So I was looking for us to, and you can go look at my pre-market plan. I was looking for us to come, I was trying to take shorts into this demand, right? Because we didn't touch it yet. And I was like, well, we didn't touch demand yet on NAS, but we did on XPX. So I was looking to see NAS pretty much sell off into this demand. So on TradingView, this candle never touched demand. But on Thinkorswim, it actually did, and it bounced, literally NAS bounced off demand and it rocketed. Had I been on TOS instead of TradingView today, I would have caught the entire upside. No, but I'm not just saying that because we ran up. I'm just saying it was a clear demand zone bounce. I'm not about to blame the market for nothing. We hit demand on TOS and we bounced off of it. But I did not know that because on TradingView, we did not hit it yet. So I took shorts and got wrecked because I was anticipating that we were going to first hit demand first. I was trying to catch a couple points to the downside, and they did it real good because this morning they gave us I don't know if y'all took that futures trade with me, but this morning we caught a nice little short. We caught this little short right here this morning for a nice ass profit. But then, no, my bad. It wasn't that short. It was, I don't know where the short came. It was one of these candles or whatever. We caught the short. Well, we caught it, not this candle. I don't remember which one it was. Was it this one? We caught a short somewhere in this shit. And I was thinking it was going to come down to this demand, which it actually had already been in this demand and it was bouncing off. So yeah, that they definitely played me on that one, but it's all good. It happens. But can anybody tell me why didn't I draw a demand zone up here? So did any of this break structure? Because this is the high. So we ran up. This is the high. We never, is any of this demand? And I know more people like, bro, Jay, that shit is choppy as fuck. I know that it's choppy, but overall, I mean, the line chart might be able to help. So the line chart kind of helped a little bit. You got to watch out for that a little bit. But overall, when you're looking at it, just keep it simple. I know it's choppy as hell right now in this area, but overall, it never, this is the high. I mean, we could draw a line right there. It didn't break the high till now. Okay. It did not break the high till now. So none of this was our demand, which if you go on TOS, you will see this actually be demand and it bounced off of it perfectly. Okay. So that's that. So just make sure I understand it. So, but everybody understands supply and demand. Do y'all need more examples of this real quick? Let's do a couple more real quick. Let's just do a couple more. I'm gonna use the XPX because a little better. So let's go find some more demand zones. Trying to get y'all some good ones first where they actually respect it. Okay. No, so for me, a higher high still counts if it wicks above. That's just me personally. Some people don't like that. That's just me personally. I still consider that, you know, for me, if it wick above, that's a higher high. A candle does not have to close above. Because I feel like if the market was so strong, the bearish candle creates the lowest point. No, so whatever. So you pose it. So for example, well, hold on. Let me explain this real quick so I don't get anybody confused. What happens if, so remember how I said the demand, stay with me, y'all, so y'all get confused. And like I said, this is all going to take practice. Sometimes, remember what I said, the market is never perfect. So sometimes your bearish candle isn't going to be there and it's going to be a bullish candle. So in that case, you still do the same thing. You just plot the candle before the rally up, right? So in this instinct, right, in this situation, we had the higher high and then we had this low, right? The higher high was this low. So we wouldn't count this because this bearish candle created that high. So we wouldn't be able to count that. And then it ended up breaking that structure, right? Did this make sense? So in this situation, and you will see this, it happens. In this situation, you're just going to take that last candle before the breakout, which would be this, because you don't want to do this. This is too much, right? I mean, you can't, if it works for you, it works, but this is just a little, for me, I wouldn't count that because you're basically counting a higher high in the demand. That's just too big of a zone. So when you see stuff like this, I just count the last candle, pretty much the characteristics, right? So for this, we had this higher high, higher low, we broke that structure, and then we draw our demand zone, lowest point. And what do? We come back to this demand zone and we bounce off, right? Yeah, everybody see that? Don't get confused, guys. It's the same thing. Pay attention. Don't get, I know it'd be getting confused sometimes. Understand, remember I said when we first got on class, the market is never perfect. So just understand the characteristics. Boom, the demand zone comes from that higher low once it breaks that structure, right? So remember, this is just the characteristics of it, okay? So it's the same thing, okay? So we have that push high, higher low, boom, came back, bounced, broke structure again. So guess what? Once we broke that structure, now this becomes our demand zone, okay? Like I said, and then you would see this a lot. I'm not going to be saying a lot to you guys. Sometimes it won't even hit demand. It'll bounce a couple points off. So like it kind of did on TradingView today, it'll bounce a couple points off. And then there you go. Boom, it bounced. You can consider that a bounce. Like I said, it's never going to be, the market's never going to be perfect. Sometimes you will have where, you know, we pushing up. And I hate when this shit happens, but like it's reality, guys. You just have to, it's the part of the market. You're going to miss a move sometimes. Sometimes it'll do some shit like this where it won't even touch the demand zone. It'll just bounce right before. Like I said, sometimes you will have where like how we've been just going over, sometimes you will have where it will do a fake out below the demand zone. Sometimes you will have where like I can just keep going, guys. This is kind of common if you like this type of stuff. Sometimes what it would do is with bigger zones. Hold on, let me draw that. With bigger zones, it'll come 50% into the zone. With the bigger ones, it'll be like 50%. I got a tool that I use for that. Here we go. Damn, it ain't mine's ain't updated. Hold on, y'all. I don't know why mine's. I set my Fibonacci tool to basically have the 25%, 50, 75, and 100. So sometimes it will come down to like halfway into the zone and bounce. Sometimes it'll come down to like 25% in the zone and bounce. Sometimes it will come to the about 75% and bounce. Sometimes it will even come all the way to the bottom of the zone and bounce, right? So you just have to understand, as long as that demand zone, be prepared to make a trade at any time and go for it. Does that make sense? I don't want nobody getting confused. I don't want you thinking that the market is going to be perfect, right? Did that make sense? Anybody confused on that part? And people are like, well, Jay, how do I still make my trade? Well, you have to understand this at the same time. It's still going to be the same thing though, right? And I'm not trying to really confuse y'all right now, but it'll be the same thing, okay? So it'll be kind of like the same thing. So if we have what time frames do you draw your zones? I draw mine on a daily and a weekly. I'm gonna get into supply in a minute, but I know the next question is gonna be, Jay, well, how do you place your trades, okay? So let's say we are in a uptrend on the 4-hour. And like I said, I'm gonna go over this in the mentorship, guys. I'm not supposed to be teaching y'all this right now, but I'm just trying to let y'all know like how it works. So let's say that this is a uptrend on the 4-hour right here. This is your uptrend on the 4-hour, right? So this is how you make your trades basically. So if this is a uptrend on the 4-hour, this whole move, what is this going to be on the 1-hour? A downtrend, right? So we're focusing on this move to be able to catch this move. right? So on the 1 hour, it's going to look like this. Let's put that right there. Y'all with me? Damn, hold on. Okay. Y'all understand what I'm saying right now? Nobody confused? Remember, this is a 4-hour uptrend, and we're trying to catch this move right here. We're trying to catch this impulsive move, right? The 4-hour time frame, we're looking at, oh man, it's an uptrend, it's a correction. We don't want to get caught in this, right? So then we're trying to catch this move up. We're trying to catch this, like this push up on the 4-hour. So on the, this green shaded area is the downtrend. Does this make sense so far? Because y'all ask me all the time how to do this, right? Okay, so how this work is to time this move, you need to time when the break of structure happens, when we break out of this downtrend. The problem is too many of you guys enter calls on the downtrend during the 4-hour correction, and you're trying to catch the move up, but you get caught in buying calls in this downtrend. And understand, once this structure breaks, right? We have this low right here, and we refuse to make another low, and we have this high. Once we break this high, right? We want to break the downtrend. How do we know the downtrend is broken? How do we know a downtrend is broken? Keep it simple. I'm not trying to confuse somebody. How do we know a downtrend is broken? When we have a break of structure, when the most recent high is broken, when the most recent lower high is broken, that's when we know that the downtrend is now over, right? So what happens is we did not make another lower low. So then we have this, okay? And then we start a uptrend. This 1-hour uptrend is going to trigger this 4-hour uptrend. Do that make sense? So you're catching entries here, and that's going to start the move here, right? So when this breaks, the 4-hour starts turning up. And once this starts the uptrend, it's the same thing. It's going to start an uptrend, and it's going to do this. And guess what this is going to do to the 4-hour? It's going to make that 4-hour go up. So when you ask me how do I enter my trades, this is how. Does that make sense? And guess what? To make it all better, the supply and demand that you just had, guess what it is? Same fucking thing. Same thing. What time frame are you charting for catching breaker structure? So it depends on what kind of trade that you want. So if you're trying to chart, if you're trying to catch some breaking structure on, let's say that, like, first of all, you have to have your time frame that you want, right? So if you're using the, let's just say the daily, for example. So if you see an uptrend in the daily and you're trying to catch the higher low, because you want to buy calls at a higher low, you're trying to catch that, then I will probably come down to like the 1 hour or the 4-hour to catch that that break of structure. If you want better entries, you can even come down to the 1 minute. I mean, it's up to you. But for me personally, if I've seen an uptrend on the daily and I'm trying to catch that higher low, you know, to the upside, then I'll probably take my entries on like the 1 hour, you know, and go from there. 1 hour or 4-hour, whichever one works perfectly for you. If you want better entries, then probably the lower time frame you go, the better entry you're going to get. But you could definitely do the 4-hour too. Just understand, you know, the higher the time frame, the more room you have to give yourself. I don't want people getting so stuck on, oh, it's a golden time frame. Just understand, the lower time frame, the lower the time frame you go on, the more likely you are to be faked out, but also the more likely you are to get the best entry. So it's pros and cons to whatever time frame you use. But like I said, if I'm on a daily, I would like to use maybe like the 4-hour to 1 hour, and like, you know, just go from there. But yeah, that's how I have my entries. But let's get into supply real quick before we move on. No. Okay, so the question was, I'm still confused. It's not the bearish candle. What creates the lowest point? So remember what we said. So if we have a so let's say this is our bearish candle. Why are my colors that low? Okay. Okay. So let's say this is our, okay, it's not gonna let me do, it's not gonna let me do that. Okay. So let's say that we're looking for it, and this is the last bearish candle before the move up. So we basically have this. Let's just do this. Boom. Okay. Hold on, y'all. Let me delete this real quick. Don't get confused, y'all. Keep it simple. Okay. So let's say we had that uptrend, and then I'm gonna tell you right now. So we had this uptrend, higher high, and we're trying to draw the demand zone for that, right? So let's go ahead and do this. Okay, so I want you to not get confused real quick. I'm gonna explain it. I'm gonna try that right there. Okay, so in this instinct, let's say that this is our bearish candle, right? Let me draw some more. In this situation, when we're drawing our supply and demand, here we go. The last bearish candle is, hold on, gotta make this color. Okay. All right, y'all see everybody with me so far. So the question was, I'm still confused. It's not the last bearish candle. What creates the lowest point? So in this situation, we have the last bearish candle before the move up. So was this the lowest point in this demand zone? Was this candle the lowest point in this demand zone? Was this bearish candle was the lowest point in the demand zone? Yes or no? Yes, right? But now let's look at this example. Okay, let's look at this example. So we have our move up, our pullback. We have our bearish candle. Our last bearish candle. But then we have something like this. And then our move up. Okay. So in this instinct, yes, this is our last bearish candle, but is this our lowest point? Is this our lower? If I were to do this, is this correct? Hold on, let me. Right. So this is not correct, right? Because that's not our lowest point, right? Yes, this is our last bearish candle. You want to make sure that you get the whole entire bearish candle, but you also want to make sure that you're able to capture the lowest point as well. So it'll be like this, right? Because you want the lowest point. That's crucial. Did that kind of make sense for you now? For the person that asked? So you're still catching the bearish candle, but since that's not the lowest point, you want to catch the lowest point. To the person that asked that, did that make sense, or are you still confused? Yeah, they could definitely do that, right? So then there's just that. But like I said, also, what about this though? What if the bearish candle was like this? Would I do this? Would that be valid? Like we got the whole bearish candle. Do this count? No, right? That candle was way too big. It's already above the previous. You're going to see this a lot, right? So in this situation, when we have stuff like that, I obviously consider that the high, right? And this would be the move. So then you would just get that last, that last candle, whatever it is in the lowest point, right? Did that make sense? Cool, cool, cool. So it takes time, but you just have to practice it. You're talking about if that didn't make sense. Guys, it's okay. I'm real patient if y'all ain't noticed. I'm real patient with. I know trading it be getting y'all. All right, so if you don't understand, all I'm saying is you want to make sure that you're understanding that your higher high is always going to be the highest point. So if if that candle is like, you don't want to over exaggerate your zone. I don't want y'all to get into a habit. I don't want to see it because I know I'm gonna see it. I know I'm gonna see it. I want you guys to have realistic zones. If your zone is this fucking big, I don't even know what to tell you. Common sense is just telling you that this is not right. Like, you don't want to have your zone too big. You want to have a nice size zone. If it looks too big, by all means, just draw that, right? You don't want to catch the whole entire zone, right? I don't want to see that, okay? Like that, I'm saying that you have to understand, the bigger your zone is, the more, the bigger your stop loss is going to be, and that means the more money you're going to lose, right? So you want to make realistic zones. Now, if it decides to just bounce right there, then you just miss a trade. But I would rather you miss a trade than having a big ass stop loss. Because technically, when it comes to trading these supply and demand zones, right? This is how your trade is going to work, right? So let me draw this. This is how it's all going to come together. So we have our push up, pull back, boom. Okay, this is how your trade going to work. I'm gonna fit the answer questions in a minute. I got you. So when your trade comes back to this demand zone, and then you got that little downtrend break or whatever, this is how your trade is going to look. You're gonna make it like right below that low, wherever you enter that. It's gonna be like this. Okay. So your stop loss is going to be a little, because like you don't want to have your stop. I've seen too many people doing this. Like I said, remember what happened to the fake outs. You don't want to have your stop loss immediately below that, because what's going to happen is you can get faked out, like we was just going over earlier. Try to grab that. Damn, move. You can have this where it fake you out. A lot of the times, that's what happens when people had a stop losses too tight. People be scared to lose. You're going to have to lose, guys. You're not going to avoid a loss. You're not, I'm telling you right now, you're not going to be able to avoid losses. You're going to lose. So it's okay. You can have your stop loss, right? So then that happens, and then it stops you out just to go there, right? So that's the whole purpose of having your stop loss a little bit below wherever you enter that. That way you can avoid from getting stopped out, right? So then you have that, right? So this is how this trade works, okay? So you have your move. Oh, let's go right here. This is kind of what I mean right now. So have it a little bit below, and this is how that works. So if you have so boom, 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 and then you have your move to the upside, most of the time you're targeting that previous high. Well, how we like to do it is we plot all of the little high points like this, and then there you go. And then there you go, price target, boom. Hit your target zone a little bit above, there you go. And that's how it look. So if you draw a zone that's too fucking big, I mean, your stop loss is gonna be big as shit. It's not even gonna make sense. You're not even gonna know where to enter it. So you wanna make sure that it's realistic zones and where it makes sense. Make it make sense to you. So just hold, like, yeah, that's pretty much what it is. Just hold and trust the process. If it ain't your stop loss, why are you out? I mean, it's just trust the process, right? Let me make sure I answer this question that I missed up here. So do you mainly look for in a trade daily supply and demand, larger time frame trend, and lower time frame breaker structure in combination? Yep. Daily, weekly supply and demand. This depends which one is not clear. Basically daily supply and demand, larger time frame trend. Are we trending up or down? And then if we're trending up, this is just me. I like to trade with the higher time frames because I like to risk a small amount of money to make a lot of money. So if you guys look at other traders, and this is just me personally, if you guys look at a lot of traders like on YouTube or whatever, 99% of them are scalpers. If you ever notice that, a lot of them are scalpers. A lot of people just get in these quick moves. They put a lot of money in their scalps to make that money that they're making. When I became a trader, I kind of looked at it from a different perspective. I was like, you know what? For me personally, I don't want to risk a lot of money, right? I want to risk a little bit of money to be able to make a lot of money in return. So how do you do that? Well, you have to look for bigger moves. So for me, the only way to catch bigger moves is to trade with the bigger time frame. Now, nothing is wrong with scalping. I have nothing against scalping. I just don't like to put a lot of money on the line. Like I see traders that, for example, I've seen traders put, $300,000 in a trade to make $6,000. To me, that just doesn't make sense in my trading strategy. I would rather put the 6,000 in instead and make whatever I can make on that 6,000. To me, that's automatically, my risk is automatically managed because I went in with a different size. That's just how I like to trade. You can trade however you want to trade, but I just like using smaller capital to make a lot of money. So if you know my futures account, in 3 days, it went from $5,000 to $66,000. How did I do that? I focused on big moves only, did not scout. I literally did not scout. I focused on big moves, 10, 20 point moves. That's what I wanted to do. And it works well for me. It might not work well for everybody else. Now, it does require a little more patience. It does require being a little more technical. But I mean, to me, it's worth it doing it that way. So it's all up to you and what you like to trade. Like I said, yeah, that's just pretty much me. But I know how to do it all. Like I know how to scout. I know how to do whatever you want me to do. But I'm just saying what I'd rather do is that. Yeah, see, I saw a guy put 300K to make 20K. See, that's the difference. The difference is I can put $3,000 and make 20K. It's just the difference. I'm not risking. I'm sorry. I'm not putting $300,000 in a trade because my personal mindset, I'll be just thinking like, what? What if like the fucking power go out or some shit and you got 300K in a trade? I just can't. I just can't process that. So like I said, TP is pretty much your high points. So I'm not gonna lie. The problem when it comes price targets, I'm not gonna sit here and lie to you guys. Price targets are hard as fuck. Trying to exit at the right time is hard as shit. It's literally hard as hell. But I'm gonna answer that question in a minute. Let me finish this real quick because I'll be getting off track a little bit. Let me finish this, but I'm gonna definitely answer that question. Yeah, definitely. I'm about to be doing this future stuff, bro. I'm about to really be doing the future stuff. See, I can really see all of this going to play with options contract stuff. We about to really be lit with the live. I promise y'all, no bullshit. We about to really be lit with the live trading. Oh, I thought somebody else asked me this. Hold on. Okay, nobody else asked me no questions. Well, so far, so I can answer the ones real quick. But overall, did that all make sense? Oh, wait. Before y'all get off, my bad. All right, so let's go over supply real quick. I'm pretty sure people that already left, they probably already know about the supply. But let's just go over that real quick. So supply is the same thing. My bad, y'all. I should have been did this earlier. So supply is pretty much the same thing. So if we're looking for the last bearish candle and the lowest point, what we'll be looking for on the supply side the last bullish candle and the highest point, right? It's pretty much the same thing. So let's go look at that. So we have a move up. Oh shit, hold on. I'm having a slow moment right now. Okay, here we go. I was having a slow moment trying to draw it. All right. So with supply, it becomes whenever we break that low, that high becomes the supply zone, right? Did that make sense? Like that red. Okay. So whenever we break that low, this is your structure break right here. Whenever we break that, whatever broke that low becomes your supply zone. right? Did that make sense? It don't make sense, I guess. Nobody knows. Whenever, so we have our low right here. We have our structure break. We have our structure break. So then is this a supply zone right here? Is this a valid supply zone? Yep. I'm about to show y'all on the chart. I like to do the demonstrations first. So here we go. We got that break, new supply zone, right? All right, so let's get into the live charts and go over that same thing. So let's get a good one. So remember, you're not gonna always have a bullish candle. So just keep that in mind. Like I said, if you can't find, if the bullish candle is too big. So for example, we have this low break. So here we go. Let's start it. We did what? We broke this low right here. Right? Y'all everybody see this low that was broken, right? Y'all see this, right? This low, it was broken. So this becomes what? Our supply, right? So in this case, would you draw it like that? No, right? Now, if you get into a habit of doing it like that, okay, I'm not gonna like be mad at you. Just understand that you're just gonna have a big ass zone. But for me, I wouldn't did it like this because that is too big. And here we go. That was your supply zone. Now, remember what I said, it's not gonna always get to it. You could have caught a short right here. This is a nice little short. It's not gonna always come to it and go from there. But I got some better examples on the weekly. The market been kind of ugly. Here go another example right here. A way better example. So here we go. We broke this. Did we break this low? Even though we wick below, did we break this low? I count what? What did I tell you guys? I count wicks as what? Breaks, right? That is the difference in my trading. Some people don't count this as a break. My psychology behind this, when we zoom into this, is if we were so strong that we say we were, we wouldn't even have wick below. So I count this as a structured break. Now you can play around with that and see if you want to count that. But to me, we broke that low. So this is a structured break. So I'm going to go back. I'm going to draw my supply, the highest point. Remember, we want the highest bullish candle, but we weren't able to get it. So there we go. And we draw our supply zone. And would you look at that? I came up to the supply zone. We created what? What pattern is this? A double top. And your price target, that low. People ask me about price targets. You're going to have that new low. Price target right there. So you took your puts, whatever you did, you took your puts. This was from 4,100. So all the way off. This was a 100-point move. No, this is a 200-point sale from the daily time frame, and it sold off to your target, right? Did that make sense? And you got to practice this. Practice make perfect, guys. It makes perfect. So you got to practice it, and you'll be all right. So just practice it. I think we got some on a weekly. You can do it on a weekly, whatever time frame you want to do it on. That's actually where I think we are headed. So another example here. So we had this move. Oh no, this is a weekly time frame. So this is a bigger zone. Like the higher the time frame, the bigger the heavier the zone going to be. So did we break this low? So this becomes our supply zone. Like I said, I'm gonna count this because that candle is too big. But I mean, if you counted it, technically you won't be wrong. If you want to count it this way, like I said, it's up to you, right? So we have our candle, we have our highest point, we covered that candle, and pretty much have we broken this? Have any of us broken? Have we broke this low? Because this is the new low because we broke it, right? Did we break any of this low? Because no, right? So is this a supply zone right here? Is that a supply zone? Nope. And you see what happened? It broke clean through it, right? Did it broke clean through it, and it actually created a weekly demand zone because what happened? A smaller demand zone until you get to the supply. But overall, what happened? Came up here, we broke this structure, last bearish candle, boom. Y'all see that? Did I confuse anybody? We literally just went over this, right? You got a little demand zone before we get to the big boy supply. Look, same thing we just went over. Break a structure, demand zone. What do? We bounce in this demand about, this was about 50% that I was telling y'all about, and then we bounce right back out of it, right? But also, we did not break this low. So this is in a supply zone. So this supply zone is still valid. Does that make sense? Remember, we didn't break this low either. You can't even count that. So this supply is still valid. So when people ask me, where do I think XPX is headed? Then we're going to head this to the supply zone. I mean, that would be the next area. Yes, no. Did it make sense? Yes, no, yes, no, yes, no. All right, cool. I mean, it was literally right there. Everything I'm teaching you is right there. You mean like, when you say what I play between them like this, would I like play these? Like this stuff, would I play that? Is that what you're asking? Yeah. So understand this is the weekly time frame, right? So with this being the weekly time frame, that means on the lower time frames, there's going to be tons of trading opportunities, right? But I'm just saying, this is now I'm really about to give y'all a gem that I'm not supposed to give y'all yet. People always asking me, Jay, when do you know to put a large chunk of your account in a trade? Like like people always ask me, like they be saying like, Jay, it just seems like you just know when the size heavy at the right times. And this is a prime example of that. So if we have a weekly demand zone and we clearly bouncing out that demand zone after having this correction right here, it's going to make a big ass move, right? So these are the type of trades that I like to put a lot of capital in because I can have a higher return based off of my risk, right? So these are the type of trades that I like to place those big bets on, those type of trades, right? I don't want to get caught in this correction, right? This is a correction, right? But on the lower time frames, you can still catch these moves. Make sense? Or anybody confused? I think I did a good job today at explaining this shit. I think I did a good job. Cool. But we got more for the mentorship. This is just like a little example. I guess I wasn't gonna do it, but I'm gonna upload this video. I guess I'm gonna upload this one. I wasn't gonna do it, but I feel like this is a good little sneak peek to the mentorship. Definitely gonna go over this way more into details, way more into like showing it really happen live. But this is also why I definitely had the admins, I told them I'm gonna have to, cut them a little bit for a little minute. That way you guys can really focus on what I'm teaching. And then once you understand what I'm teaching, if you like something that they're doing, what they're doing, they can go over there. But this is my way of supply and demand. So, not everybody do it this way, but this is my method of it. So what I want you to do tonight is go practice this. Use the daily and the weekly and literally look for that. Right, one more time before we go. Just one more time, because I know y'all probably, going through your heads right now. just understand you're looking for structure breaks. That's why I'm saying market structure is king. Okay. So if we're having an uptrend, we want to make sure that it breaks structure. So here we go. One more time. Yeah, I got you on the take profit before we go. We broke structure right there. So is this a valid demand zone? Is this a valid demand? Yes, no, yes, no, yes, no. Just trying to be a little quick refresher. Yep. Okay, what about this one? Is this a valid demand? Yep. All right, same thing here. We broke structure again. Now this is a valid demand. All right. It's cool. Same way with the puts. Okay, same way with the puts. We broke this low right here. This is a valid supply now. Keep it simple. Just focus on the structure. All right, we broke this low. And it's also coming to a break and retest. It can also be a break and retest. Like it's all the same shit. Like it could be a break and retest. You want to take, regular take puts at lower highs. All of this come together. If you've been with me for trading, if you've been in my previous mentorships or just previous classes, I've always told you take puts at lower highs. Okay, now you have the lower high plus the supply zone. Then I said take puts at the break, let it break support, even if you're a support trader. If this is support, it's the same thing. Let it break support, retest support as resistance, and it's the same, it's literally the same thing. People make this way harder than what it needs to be. It's the same thing. Let it all make sense. It's the same thing. You don't have to be confused when it comes to this, right? If you trace support and resistance, same thing. You trade supply and demand, same thing. You trade break and retest, same thing. You trade just structure, same. It's all the same thing. Don't let all of this technical stuff confuse you. It's the same exact thing. The only problem is being patient enough to let the trade work. That's the problem with that breaking structure. Yes, damn right. So the question was, with a breaking structure, can a fake out still happen? Yep, it happens all the time, right? I'm gonna show you an example of like a fake out sometimes. So sometimes you will have this. I don't even know what that is. The C1 that you just, I don't know what that is. Yeah, I don't know what that is either. Is that Cooch? Oh, change the character. Yeah, it's the same thing. I didn't know what that was. All right, so this is another form of it. So what can happen is you have that lower high. All right, so you had that lower high, and then on the lower time frames, you might get a little move, like a little wick. Like that shit is annoying when it happens, but you can have something like that. It happens, right? Normally it'd be a head and shoulders or something and go from there. Like that'd be your fake out right there, stop you out, come back, create that shoulder, then sell off. It's all the same thing. Understand you will get faked out. It's a part of the game. It's all good though. Just get back in the trade. You took a loss. I take losses all the time. Stop being scared to take losses. If you size right, if you size right, you'll be all right in life. But we'll go more on that. Okay, so last thing, somebody asked me about price targets. When do I consider zones invalidated? Is when we break structure, when we break the structure in the wrong way. So, like for example, okay, so if this is your supply zone, and then like I understand we're gonna have fake outs, but overall, start your count over, start your structure over if this happens, right? But also understand that it could be a fake out and it could come down. But what I really consider a zone broken is like when we come out of it and we start another trend, right? that's when I consider like, okay, that supply zone is now broken. It's starting a new trend and all that, right? It broke the previous high. And that's when you would consider the downtrend broken, right? It's the same thing. I would consider supply invalidated when structure is invalidated, right? It's the same thing. In a downtrend is now invalidated once we break that most previous lower high. So in that point, we broke structure and now we're starting an uptrend. Now that supply zone no longer matters, right? That supply zone, you have to start your structure over again. Too many people be sold on, oh man, I don't want to make a new one. No, keep restart. You have to keep changing your structure, guys. The market is constantly moving. You got to change it. That's not supply no more. This is your new supply. This is your new supply. Like you got to constantly move it, right? So when it comes to price targets, the best way to do it is, and people have different ways of finding price targets. Like you got gap levels, you have all types of ways. You have Fibonacci levels. When it comes to price targets, it's kind of really what you prefer. You got like whole numbers. Everybody have their different ways, but the most common way is, you know, if you want to uptrend, you know, your price target will be that new high. I mean, that previous high. So you will buy calls right here and you trying to ride it to that high. That's like the most common way to find your price targets. And doing this, you would definitely see your targets hit. So, you know, come down. Once you do that, that is your price target. So that's pretty much what the price targets, and you know, how to hold trades longer, pretty much as long as we're still in that uptrend and we're not breaking higher highs and higher lows, you can still hold your trade, right? That's how you get to hold it longer. Because if we're not breaking structure, technically it's no reason for you to sell your trade, right? But we all know how the market is. If you don't sell in a timely manner, it comes down. So the best way to do it is kind of chase it with a stop loss, especially in futures, you can literally raise your stop loss up and chase your profits. So if definitely in futures, I highly recommend doing that, because that's the thing about trading. We don't really know how long a move is going to go. We really don't, because sometimes it can, you know, get ready to get to that level and it might not touch it and then it breaks down. And I want traders to understand that the market is not perfect. It's not going to always hit your profit target immediately. What I like to do is, that's why in the chat sometimes when I tell the chat to sell a trade before the price target, is because I don't 100% know if it's going to hit that price target. So I like to get you guys a little out of there before the price target. And, you know, sometimes it will just hit the price target and continue running. But, you know, I'd rather you guys be on the safe side and get out a little bit before the price target, just to be on the safe side. Because it's been plenty of times where we miss the price target and we just tank, right? So like I said, the best way to handle that is just kind of just to chase your stop loss, you know, and just go from there, keep raising it until you get stopped out, right? Over time, I'm just being honest with you guys, over time, you will kind of figure out, you know, what you like to do. Like I'm okay with holding my trades longer, depending on if the market is pushing up and still trending. You know, I'm okay with holding my trades a little longer because I have a little more experience, so I'm able to do that, right? But don't be upset. In the beginning, you're going to have to take your profits. You're going to have to figure out, you know, you might take your profits here, then the next trade you might let it run a little bit, you know, and then with experience and chart time, that's how you get better at holding your trades, right? People think that it's a secret method to holding your trades longer. It's not. It's all going to come down to experience. It's been plenty of times where I fucking tried to hold a trade longer and I told y'all to sell, and then the trade just comes back and stop me out maybe at break even or a little profit. It's been plenty of times that it happened. I mean, it's a part of the game. When you don't happen to catch the break or the retest, do you just wait for another similar move, or are you looking? Yeah, so that's a good question. So if I don't catch the retest or the break or whatever, then ideally what you want to do is you just want to wait until it gives you another setup. Too many people, they miss the initial moves. They go ahead and chase and they get in at random ass price points, which end up just stopping them out. So the goal of trading is to be patient, right? So you want to wait for the correct times to get into your trades. I see this too many times where, we will have that move up and people miss all types of opportunities. So they just see it ripping. So then they would just get in right here because they're like, oh man, I already missed all the good entries. So I'm gonna just get in here. They make a little profit, and then they end up, the stock pull back, stop them out. They get stopped out, and then they just go higher on them. This happens too many times, right? So just focus on getting in at the right times. And if you miss the move, guys, you miss it. It's always going to be another trade. It's always going to be another opportunity. If you miss the move, you missed it, right? Like today, I missed NASDAQ pushing 400 points to the upside. I missed it. You know what I mean? Like, I'm not about to just jump in at any point, unless it gave me a nice little pullback and did the little things that I wanted to do, that's just how it works. Does that make sense? It's patience. It's patience, guys. You have to be patience wins. A thing that I like to say, patience traders take money from the impatience traders. That's all it is. Impatience traders are transferring money into the patience trader's bank account. That's all you're doing. So if you're an impatience trader, you're paying a patience trader. That's all it is. That's how I like to think of it. When I win trades, it's because somebody was impatient and I was patient and I got their money, right? So that's what you want to focus on. But yeah, so I'm just giving y'all the honest truth when it comes to live trade. I don't want people to be thinking like, oh, Jay always saying this. So I am, especially when people understand how I like to trade, I have no problem with live trading. I used to do live trading all the time. We've been pretty good. Y'all know I'm not going to show my face. That's just part of the game. That's a little extra charge for me to show my face. But overall, I don't have a problem with live trading. The thing about me is, though, when I'm trading, I be so in the zone. It be kind of hard for me to be, I be just in my zone, like listening to my music in my zone. So I really be kind of like, in my own little world and stuff like that. But for learning purposes, especially for the mentorship, I have no choice but to live trade. But yeah, it's just, pretty, I told you I miss live trading. We used to wake up and make some good money on live trading until live trading kind of went away when I had lost $13,000 on live trading Boeing when I was in Hawaii. That was kind of my last time really live trading. I was pretty mad about that. Yeah, I was pretty pissed off about that day. I thought it was a bear flag, and the bear flag just kept going and going and going and going and going. I promise you, this how that Boeing trade did me, bro. That was like really like that was just me just being dumb. This is what happened with Boeing. So this is what happened. I was on live, right? And I literally kept doing this. I'm like, how many of y'all did this with the bear flag? I know I'm not the only person that did this shit. So when you got the bear flag and you draw it and you're like, man, it's a bear flag. And then it just keep going and going and going and going. And you keep drawing it. The bear flags just keep getting bigger. And you just like, it's a bear flag, bro. It's a bear flag. Oh shit. Oh shit. What just happened? Where my bear flag go, y'all? Oh, there it is. And you just keep telling yourself, it's a bear flag. And you just, I literally on live. This is a while ago, y'all. I was really just, I don't know what it was. And I was averaging down. I literally that day, I don't know what it was. I think because we just had like a big day before that. So I came into the market kind of being like cocky and shit and let me get big headed. So I really just thought I could predict the market. And then it just started going higher and higher and higher. So then I ended up averaging down, and I told myself if I go back to break even or a little bit of profit, I'm gonna sell. So that's exactly what happened. So we had a move like this, and then we ended up coming back down, right? And I went from down like 13K. No, I went from down like 10K right here. And then I ended up went into profit like $700, and I was supposed to sell. And I was like, I think some in my mind was like, fuck that, you didn't held all this time. You're not finna sell for no $700. And that shit just rocketed and it just kept going and kept going and kept going and kept going. I mean, that was the biggest fucking candle I ever seen in my life. And it just kept going. It just kept going and kept going till my shit was worthless. And yeah, that was pretty much that was my last day live trading for. I haven't live traded since then, literally. Since that day. And I went home. I was supposed to stay in Hawaii for a month. I went home. I was mad as shit. So yeah, so I went home that day. We had just made hella money too. So it was like, damn. But I gotta redeem myself. That wasn't a good way to go out. I gotta redeem myself. So I'm definitely gonna be back. I can't let my legacy end like this. So but yeah, that day was just I was a little cocky. So I haven't been back since then. Yeah, that's what I said. I got back home and I was like, man, I need to work. Like, I just lost 13,000. What am I in Hawaii celebrating? What fuck am I celebrating in Hawaii right now if I just lost $13,000? I need to take my ass home and eat some ramen noodles or some shit. I don't need to be out here drinking and enjoying my time eating $100 steaks on the beach. Now I need to take my ass home. I just lost 13K. So yeah, I went home that day. But yeah, we definitely got to bring that back. Promise y'all that's gonna be bringing that back. I have to redeem myself, but also understand, guys, we done made a lot of money on live too. I just think it was a pride thing for me, and then it was funny because I was having people that was like, because I used to trade live with a friend. Me and my friends, we used to trade lives together, and one person was like, after that loss, somebody had said, yeah, take Jay off of live. He don't need to be on live trading no more. And then I was just in my mind like, I was like, who the fuck is they talking to? And I was like, you know what? I ain't never coming back on live again. So I was like, who the fuck is they talking to? Which I mean, never come on live again. All right, say no more. I ain't gonna never come. So I literally never came. Actually, no, I take that back. I did come on live the next day when I got home. And yeah, I did. My bad, y'all. I did come back on live. I remember. So I ended up, I think the next day when I got back home from Hawaii, I was tired as hell. You shouldn't be trading when you sleepy. And I ended up getting back on live to try to redeem myself. And I never forget. I don't know what it was, but it wasn't even no analysis. I'm gonna admit that right now. I can admit that now. It's been years. It's been about a year since that happened. But I just woke up and said, I'm gonna just short Microsoft. It wasn't I don't know what it was. I don't know why I took Microsoft as my victim for that day, but I was just like, I don't know. I'm just gonna short Microsoft. I to this day I don't know why I said that shit. And yeah, I just decided I want to mess with Bill Gates that day, and Bill Gates basically just said, "Fuck your puts." And I mean, it just, yeah, I got fucked up on Microsoft too. I had lost I think like 7K. And then from that day, I was like, you know what? Fuck this live trading shit. Actually, you know what? Now that I think about it, when I was in Blueprint, remember we used to charge for live trading. I think it was like $20 a month or something like that. And I had hit up Isaac. I was like, fuck this shit, cancel it. I'm not doing it no more. So, I was like, I'm not doing this shit no more. Fuck live trading. I'm done with it. I quit. Nope, I'm done with it. Make it free. Like I was letting Isaac do it, and then we used to switch turns because Isaac used to have to do the live trading for a day, and I had to do live trading, and I missed my live trading on purpose and all stuff. So yeah, that I stopped live trading after that, it was really a pride thing for me. You know, I'm here to I admit mine. It was a pride thing for me. Just losing in public for me was just a huge thing. Now I lose with pride. Now I'd be like, shit, I lost. Shit, I was wrong. But that's just me just growing up in my trading, right? So now I will admit for you guys, like I admit to you guys, like shit, I lost. Like it loss is a loss. I think it's because people they focus more on success rather than they focus so much on success when you know, failure comes, they just get just blown, right? They just like, man, I took a loss, I'm just all blown because they're so focused on success. But actually losing is actually it's pretty, losing helps you, right? I've learned so much from my losses. It's crazy. Like I learned so much stuff like from losing. It's just, it made me a better trader. So, you know, let me stop this recording. This shit long as hell.